Hello and welcome back to How About That Crypto. You're watching your daily crypto news and updates with your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. I'm here Monday through Friday and I explain crypto and Web3 while keeping you up to date on all the latest. Today's news story is the head of the U.S. Central Bank, Jay Powell, speaks on inflation, crypto, regulations. What did he say? Why is this important? I'll explain it all. But first, if you like the content or you don't like the content, please let me know by leaving a comment below. If you're listening on podcast, please give me 5 stars and follow me. If you're watching on YouTube, please smash the subscribe button, ring the bell. It helps support the channel and it doesn't cost you anything. Just to be clear and litigious, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. And my prayers continue to go out to the Ukrainian people and all those affected by this war. Hopefully this is over sooner than later. The amount of people being affected is starting to expand, so prayers go out to everybody. I'm going to jump right into this today. I got a lot of stuff to go over. All right, first of all, I want to apologize to my Spotify subscribers. For some reason, for some reason, my podcast host did not convert my audio file this time. Yesterday, I just learned how to convert an MP4 to an MP3. Hashtag annoying. Anyways, yesterday's episode was on YouTube, and I will be getting a website. I'll be getting a website up soon. So if you have a second option, for audio, just in case. So that said, I often listen to YouTube and not watch it. So that's always an option. Just a thought, but it's rare that I don't get an episode up. So if you don't see it come up on Spotify, just check YouTube until I get the website open. Get the website up. Anyway, if you didn't listen to yesterday's episode, it was one of the most exciting in a while. This one today is pretty exciting too. So the news: Jerome Powell, aka Jay Powell, aka J Money, is the chair of the board of governors of the Federal Reserve System. The board of governors is 7 people nominated by the president and confirmed by the Senate. Okay, so what is the Federal Reserve System? You can see in the pictures there, you can see the, I'll explain the Federal Reserve System and then I'll explain the visuals. And if you're listening on podcast, just follow along or you can click the links in the description below. The Federal Reserve System is a private organization of Federal Reserve banks. The shareholders of these banks are member banks or private banks, aka the banks you use daily. I will say it again in case you didn't catch it, and you can use the links to confirm this. Most people are very surprised when I tell them the Federal Reserve, the Fed, and all the banks are private. They are not public banks. Yes. Okay, so private banks around the country get to vote on a board of directors. The board of governors, which are appointed by the president, confirmed by the Senate, choose the presidents of the banks from the list of board of directors. So basically, the private banks, they decide who the board of directors are. The publicly appointed board of governors pick from that list of people to be the presidents of the Federal Reserve banks. Then 6 of those people join the publicly appointed and confirmed board of governors, and this creates the Federal Open Market Committee, or FOMC. These people vote on monetary policy. Basically, the private banks around the country get to elect 6 out of 13 people to set monetary policy, and they get essentially guaranteed returns on their investment. So you have all these shareholders, all the private banks, if you're a member of the Federal Reserve System. So if you're a bank in America, most banks are members of the Federal Reserve System. They deposit money into the Federal Reserve System. They become shareholders. They get guaranteed returns, and they get to elect people to set the monetary policy. Basically, it's kind of like a circle jerk. Anyway, sorry, this is crazy, but I'll explain in a second why it kind of makes some sense. I'm not saying I am a fan. I'm not saying I'm against it either, though. There might be special circumstances where they don't get a return, but But the most important thing is here, bankers select bankers who get a say on the nation's money. The public only gets one extra vote out of 13. That means the US citizen, through their representatives, have less than 8% sway over their money. Yes, confusing AF. If you don't know what that means, Google AF as an acronym, so I don't have to use too many curse words on my show. But the only important thing is that monetary policy is essentially set by the banks, not by the government. Yes, this was by design. Yes, it does prevent politicians from manipulating things. Historically, bankers are much more trustworthy to keep the money stable than the politicians because they have a vested interest. Politicians just try to get votes and win power, and they can manipulate money and drive the currency down into the ground. Yes, please bring the hate, bring the debate, come on my show. Let's have a conversation about this. This is just the reality of things. These are not opinions. Some of this part that started by historically, yes, when the king or the presidents have a say over the money supply, what do? They blow it up. Although, look what the Federal Reserve has done. So maybe, I don't know. Anyway, so that is the design. Love it or hate it. Is there a better one? I don't know. I haven't seen one. If you have an idea for one, but there might be one exception. If you lie to everybody about your data, like China. Anyway, I digress. Come on to the show or leave a comment below. Let me know if there's a better system. I would like to hear your ideas. Maybe we need to think about a new system that hasn't been created yet instead of just trying to bring back old systems that haven't worked. If you disagree, please leave a comment below. That's not the point of today. I just thought I would give you a rundown of how it all works. If you didn't know, the Fed is a private bank, and there is less than 8% majority of public oversight. You can take that to the bank. Okay, and you can see in this picture, you can see Congress elects the Board of Governors, and the Board of Governors have a sway over the FOMC and the Federal Reserve banks, but only by under 8%. So the rest are all bankers. Okay, now I will move on to my news today. Hopefully that didn't take too much time and you're excited to hear from the news. Okay, so now you should understand why it's important to listen to Jay Money when he speaks. You know, it moves markets. All the bankers do because he's the head guy of their banks. So here's a clip from CNBC. Check it out.
Welcome back to Fast Money. We've got a Bitcoin alert for you. Listen to what Fed Chair Jay Powell said about the cryptocurrency today.
Crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar.
Boom, 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 boom. Now, Bitcoin lovers for currency, go ahead, leave a comment below. Let me know what you think. I think that I love that he said this because he just basically said, I'm not worried about it going against the dollar. So we can get rid of all the FUD about all the people thinking Bitcoin and crypto is going to destroy the dollar. We got the banker of bankers who all listen to this guy and they all have vested interest for the stability of our money. Said it's not really concerned. It's more like gold. Now, leave a comment below. I've moved on to this next article here. All right. Author Helen Braun reports for Coindesk. Fed Chair Powell's hawkish stance on inflation could hurt crypto. Interest rate hikes could drive down crypto, especially because of its strong correlation with financial markets, analysts say. We have two things happening here. Everyone accepted that inflation is real and it's a threat, and the Fed is raising rates. Bitcoin is seen by some as a hedge for inflation, but this article is saying that Bitcoin is a risk asset highly correlated with the stock market. Therefore, rising rates will put sell pressure on Bitcoin. The Fed is planning on raising rates and targeting a 4x plus increase. Check this excerpt out. The Fed officials expect the rate to be at 2.75%, suggesting that they're willing to go above what they perceive to be neutral in order to rein in inflation this year. If this forecast comes to pass, they're going to lean on the markets. They're going to want people to lose money, said James A. Bianco, president of macro strategist at Bianco Research. Will that hurt crypto markets and risk markets like stocks? Yes, and that's part of the plan. They don't want it to crash, just want it to slow down. So that's an interesting. Please leave your comments below. The reality is that Bitcoin has responded positively to this news, but what does this all mean? Will it decouple from the markets, and will it fulfill its gold-like inflation like J Money said? I don't know. Leave a comment below, and moving on. So there's more. So this is like all the stuff that Jay Powell has been talking about in the last week or so. Another author, Jennifer Schoenberger, reports for Yahoo Finance, Fed Chair Powell, new rules will be needed for crypto. I think I've been saying this a lot, and so is everybody else. Novel technology like distributed ledger and decentralized. Oh, wait a minute. Yeah, that's I'm in the right place. Novel technology like distributed ledger and decentralized finance have the potential to improve efficiency of the payment system and encourage a more competitive financial landscape, Powell said, speaking on a panel at Bank of International Settlements Innovation Summit on central bank digital currencies. He goes on to say that there has been no decision on central bank digital currencies. What most people may not know is the number one currency in crypto markets is actually dollars. These dollars are called stable coins. While they are not regulated yet, these represent dollars or dollar equivalents. Creating a CBDC could have negative implications for the entire crypto space. Basically, just because China has one doesn't mean we need one, but we might. J Money's doing the research. All right, last and final piece of news. All this is, again, J Money speaking within the last week. It's very important. I explained the structure of the Federal Reserve. It's not a government organization. So like you should appreciate how important it is, because these people have a very strong vested interest to keep the money supply, the dollar strong. Author Christopher Rugeberg reports for Tulsa World, Powell, digital currencies will require new regulations. Federal Reserve Chair Jerome Powell said Wednesday that new forms of digital money, such as cryptocurrencies and stablecoins, present risks to the U.S. financial system and will require new rules to protect customers. I want to read a couple paragraphs here. Powell, speaking Wednesday on a panel organized by the Bank for International Settlements, a global organization of central bankers, also said that new technologies will likely make electronic payments cheaper and faster, but they could also destabilize existing financial institutions, he said. Our existing regulatory framework our existing regulatory frameworks were not built with a digital world in mind, he said. Stable coins, central bank digital currencies, and digital finance more generally will require changes to existing laws and regulations, or even entirely new rules and frameworks. Well, what do you think about that? Pack your bags, Gary Gensler. It's not in your world, and you can't use the Howey twist that was created in, I don't know, like 80 years. Like, these rules were created 80 years ago. I think the Howey test is a little younger than that. But the point is, the head of the SEC has been going around saying that, hey, we got the rules already. And J Money's out there saying, no, we don't. Executive order has come out, and he said, everyone's got to come together, do the research. This is going to be a government-wide thing. Whether you think that's a positive thing or not, let me know. Leave a comment below. This is a ton of information today, so feel free to listen to it again, and check out the links below. Do your own research, verify my stuff. Basically, J Money heads the Fed. The Fed is basically private banks. They all want the US dollar to be stable. So when J Money speaks, listen to J Money, okay? Because all the other bankers are, all the traders are, which means it's going to move markets. And he's saying that Bitcoin's gold, and he's also saying we need new and updated rules because the rules we have don't work. So those are two big things. The other things that I reported on were inflation's real, inflation's a threat. You should be concerned. This is not financial advice. These are just what is being in the news. And what was the other thing? So inflation's real. Oh, and rates going up, if Bitcoin doesn't become actually like gold and actually protect from inflation and moves with the markets, it could go down. I don't think so. What do you think? Leave a comment below. Let me know what you think. I want to hear from you. If you're listening on podcast, please give me 5 stars and follow me. And if you're watching on YouTube, please smash the subscribe, ring the bell. It helps support the channel. It doesn't cost you anything. Have a good day and hodl on.